Well, happy Thursday, everybody. Welcome to our long diagonals or long verticals and diagonals webcast. I'm Connie Hill. Happy that you would join me here today as we venture into these two strategies. Now, one of these strategies has been kind of a bread and butter type of strategy for us in that we keep doing it over and over again, seem to be having some decent results, which is nice. So we're going to report back on a couple of things that we did last week. And then I want to go back and introduce something that we tried to do a few months ago. I'll tell you about that in terms of doing a diagonal that we intend to last a long period of time. Okay, so that's what we have on tap for today. Now, I am joined in the chat by Barb Armstrong, good friend, fellow coach. She's very knowledgeable in all these strategies. And as you have questions, go ahead, type them in. I'll keep my eye on the chat. Barb will as well. So if there are some questions that come in that I can't quite get to, Barb will help me out with those. Now, I hope you're following us on X. I'm Connie Hill CS. Barb is Barb Armstrong CS, and we'll post educational content out in our X accounts. Would love to have you follow along. It's free, of course. So just know that. Let's go through our disclosures and get on with our agenda today. I have quite a bit I'd like to cover. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be intended for educational and informational purposes only. Don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes as well. Hope that you're using it on your own to kind of fine tune the rules that you like to use with the different strategies that we're talking about. Past performance of any security or strategy does not guarantee future results or success. In the Paper Money software application, it's important to know that it will not assign you early, even though a live market certainly could assign you early on any option that you're short. All right, we're going to have one quick announcement. We're going to talk a little bit about the differences between diagonals and long verticals and their similarities. Whenever we're talking about some of our example trades, we'll talk about the impact of price, time, and volatility, because those are the things that most influence the value of an option. So it's important that we kind of keep tabs on both, well, all three of those ideas. All right, coming up next week at night, 7 o'clock Eastern, we're going to be having our mid-year market outlook. Now, a lot of you tune into that and look forward to that. So that will be coming next, a week from today, okay? Will be coming. I have put a link out in the chat that is a link that you can register now. So if you go up a little bit higher in the chat, you'll be able to see that link, and Barb might be able to post that in there as well. If it gets lost in the chain up above, she'll go track that down for us. Thank you, Barb, in advance for doing that. All right, let's talk a little bit about diagonals and verticals. And sometimes they can appear to be very similar trades because we're going long an option and we're going short an option. We're going to be creating a net debit initially. And so you're kind of like, well, what's the difference between the two? And the primary difference is that with diagonals, we're going to use different expiration dates. Okay. With a long vertical, we're using the same expiration date, which I think is a little bit more intuitive. And so we'll talk a little bit about why we might consider using a diagonal when we get to our diagonal example trade today. All right, let's head over to Thinkorswim. I want to show you kind of some good things that happened in our account last week and kind of give you an accounting, so to speak, as far as where we're at on some of our trades. Now, we did 2 long verticals last week that both of them did really nicely for us. We shouldn't be too surprised, but they did. We did a long call vertical on AMD. So last week would have been the 11th, which would have been right here. I usually put a circle on that date. I didn't happen to do that one, but just kind of notice what the price action was on that day. Very nice long bullish candle. When we got into the trade, we had some upside on that day. And then the next day, boom, it hit our profit target. Lovely. We love it when it hits our profit target. How quickly did it do it? It did it the very next day. So we were in this trade all of 24 hours and 13 minutes. Okay. that we were in this trade. So we bought it for $4.55. We said we would be happy hitting a target at $7.82. It filled us a little bit nicer than that, which can happen. Don't always plan on it happening, that you'll always get filled better. That doesn't always happen, but we did get filled at a nice price. So on that particular trade, we had 4 contracts going on. We had on it 355 gain per contract when you do the net debit here, 810 minus 455. We had 4 contracts on that. That netted us $1,420 in a 24-ish hour trade. Okay, so not too bad. We could be happy about something like that, right? Getting in and out of a trade quickly. Oh, I love that. The other trade we did, let's go look at its chart real quickly, was CrowdStrike. And we've been using CrowdStrike, a few times over and over again. Kind of zoom in on here on CrowdStrike. Same thing, we got in on this nice little bounce here last Thursday. It continued to go up that day, kind of was sideways the next day. And then here on the 15th, I have a mark there that's where we got out. We'll go look at the count or the values on that. Oops, wrong thing. Let's go monitor. And on our CrowdStrike, we paid $4.80 for that net debit. So we were expecting our max theoretical gain on that could have been $520. We said we would be thrilled. Where's our 680, 690? We would be thrilled if we could get 756 out of it and jump out. And we got filled about 790. And it was pretty quickly there on the 15th when we got out. So that one was a pretty quick turnaround trade as well, because the 15th was Monday. So the first one we got out on Friday, the next one, it hit us out on Monday. We can be happy about that. As far as the money on that particular one, we had a net of 310 per contracts. We had 5 contracts there. And so we had a net of $1,550. Okay, so a couple of quick little hits. And that's why I say this is kind of a strategy that some traders might kind of treat it as their bread and butter strategy, that it's just something we continue to trade and trade and trade over and over again in terms of a strategy, as long as we're going the trend of the market, as long as we're going with the trend of the stock. It doesn't mean we're guaranteed a positive result there, but we have been having some success. All right. Ooh, Prakesh, great question. I'll answer that in a minute. Let me show you Microsoft. This was a kind of our dog, okay? Unfortunately, Microsoft. We had intended on it. We did a long diagonal. We did it back here. That was May 7th, okay? And for a little bit of time, it cooperated our long call diagonal. But then it ran into this big streak here where it was just selling off. It finally broke through support. We gave it a little time. In our class last week, we sold one more contract against it because it looked like the stock was kind of around a support level. Let me get to the 11th here. It was about there. And so we did sell another call against it. It turned out it had a blip. It gave us a hammer the next day, one little blip, and then the next day just didn't follow through. So we decided to just be out of it, be done with it. I haven't added up the numbers there, but I'm going to guess we probably had a little bit of a loss on that one, even though we gained some money here selling contracts, against it. Okay, so that one didn't work out so well for us, but sometimes that'll happen. So there we go. That's our updates on our trades from last week. Any questions on that? Ooh, okay, couple great questions here. Prakesh, let's go to your question first. You said, how do I find the stocks that I am using for these trades? You might want to check out last week's class. Last week's class, because I get that question all the time, we went through and ran a scan, actually a couple of scans, and combined it to create a watch list called liquid options. And all of the stocks that we're using here today came from that. And you can see I've done that scan a few times. Here was from April. I don't remember where that was, another April and May. So this one was the one we did June 11th. So that was just last week. And that's the watch list that we're using here. And we're going to use it for bullish trades, for bearish trades. We were looking for lots of liquidity in the options. And so that can give us kind of a nice list to go to when we're looking for possibilities. And many times what I'll do is I will sort it here by the change today. So market's more bullish. I like to see the ones that are going up more bullishly initially. Okay. But if we get into a bearish theme, there's our Microsoft on there, then we might end up doing some bearish things. Okay. Question from Pyro Bowler says, I'm new here. Where do I find the past video instruction? Fabulous question. It's in our archives. How can you find our archives? Well, if you subscribe to our Trader Talks channel, which you may or may not have done yet, there's a little logo in the bottom right-hand corner of your screen. You click on that blue YouTube-looking logo, YouTube-looking, not yo-yo-looking. And then what you'll be able to do is come over here to our Trader Talks page. And it just is a nice organization here so you can find what we're doing. Okay, so let's see. So we're doing our dividends, or our class right now, long verticals and diagonals. Coming up next, we'll be investing in dividend stocks. But from this page, you can come over here to the playlist. And these kind of reorder a little bit. So ours is usually down here a little bit in our playlist. And so that was about 6 rows down, I think. And so it's this one here, long verticals and diagonals. And the title was last week, Stop Guessing Why Traders Use This Option Scan. Okay, so I will teach you, it's combining basically 2 scans together. Okay, so that was down, let's count. 1, 2, 3, 4, 5, 6, 7, 8. 8 rows down. All right. Thank you, Barb, for posting that in there as well. Sam says, you know, I tend to use diagonals for income on stocks I own. And that is one way to definitely look at it. You know, a covered call is a strategy that some people might use for stocks that they own where they want to sell calls against it. It sounds like Sam is adapting that, saying, oh, a diagonal have a long option take the place of a stock to do that as well. And we'll look at one of those opportunities here today. All right, let's head back over to Thinkorswim. Sam says, yeah, verticals can also be productive for income. And that's kind of how we've been using them in our class here, those long verticals, is to generate some cash flow. And it's done pretty decent for us. Now, let's just take a quick look. I want to see what our market's doing today. Looks like a little bit of a nice recovery is still in place. So the SPX is up about 1%. NDX, let's see on it. Okay, good. It's holding in there at plus 2.25% or so. So it's having a nice little boost here today as well. I typically will look at the SPX and the NDX because most of the stocks that we use come from those indexes. Okay. And so it's nice to be in sync with them because we're looking for lots of kind of stocks that have a high trading activity, which usually leads to high open interest with the contracts. Typically, we're using some of those larger caps, mid-cap stocks, not so much the small cap stocks, okay? And it's good to know what's going on with the small caps, that Russell 2000 list as well. And it's actually been in gear really nicely. But a lot of our stocks you'll find don't necessarily come from that, okay? All right, but I put the link for the liquid options so I can copy it onto your Thinkorswim. On that particular one, when we create some watch lists, we're not allowed to necessarily share the watch list with you, but going back and learning that process so you can learn it for yourself is great. We are only going to update that watch list maybe about every 5 or 6 weeks. It'll largely stay the same, but as new stocks pile on, we're going to be having a rebalancing of the SPX, which is done quarterly. That's going to be taking place soon. And so some of those newer stocks that haven't been on the SPX or the NDX will come on. I think there's a couple of new semiconductors that are going to be coming on the SPX. Okay. So sorry about that, Auto Max. Can't put the link directly in there, but actually I can do this though. What I can do is I can come over to the scans and I can send over the first part of the scan. Let's find liquid options. Oh, right here at the top. And it really was kind of a simple scan. We're using a minimum price of $40. We're looking for average volume in the last 20 days to be 2.5 million. And then I intersected it with, well, we did a scan in penny increment options, which means typically stocks that have a lot of trading activity, that some of their options will trade in pennies rather than nickels, dimes, quarters. And then we intersected with the SPX. And then the second scan we ran, we intersected it with the NDX. I should say the NASDAQ 100. Okay, is what we did there. That I can share with you. So let's come in here and I'll just say share scan query. This will give you a little bit of a head start on that. And I'm going to post this here in my Scratchpad. Those of you that are listening to this on the recording, like I know lots of you do, that'll be the formula for that. And when we get to our first stock chart, I'll put it in a text message. So not a text message, a text box so that you can see it. Okay. Anytime we share a scan with you or a script of any sort, remember it's never guaranteed as to accuracy or timing. Okay. Let's look at some new opportunities here. First one we're going to take a look at is going to be, I'll say this with my best Texas accent, Texas Instruments. That's not a very good Texas accent. Some of you would do much better at that than me. In any case, Texas Instruments, been a nice upward trending stock for us. Typically what we'll use in this class is a 10-period moving average. That's the balloon, the blue, and a 30-day period moving average, which is this one, is the red line. Okay, so kind of a really short-term one and a one that's a little more intermediate, but kind of on the faster side of that intermediate. Had a nice run up, hit a new 52-week high, pulled back. It had a little pullback here, and today we're getting a nice little pop. Some of you might look at that as maybe a trade above the high of the low day. We might look at it if it really closes there as a close above the high of the low day. So that's going to be our first stock. All right, I'm going to paste that formula in there. So if you're listening to this on the recording and you want that script as well for that, at least the first part of the scan, the majority of the scan, that's what the URL is. Pause your machine, go ahead, write that down, and then you can go ahead and hit setup, open shared item, pop it in there. Oops, I popped it in the wrong window. Pop it in there, hit preview and import, and you'll have it. Okay, so on this particular stock, it's had some nice run up for us. And on a long vertical, we really want the stock to be moving. It's kind of like we want to see it make a move, whether it's a breakout or a bounce or something, and get on quickly in that move and try to ride it if it continues on for us, which we're expecting it to do, although it's never guaranteed that it's going to do what we want it to, right? I have a couple of columns over here with our liquid options watch list. I've got a 1 month and a 3 month calculation here, because it can give us an idea, hey, is this thing a real mover or is it kind of a slower mover? If it's a slower mover, maybe we might do a diagonal on it. If it's a bigger mover, or has been traditionally, then we might consider it for more of a long vertical. And that's what we're going to do on TXN. Yeah, the month is only up 4%, but we can see within the month it had a major pullback. But over the last 3 months, man, this thing's really been a mover for us. So we're going to do it. Chris says, I'm about 6 miles from Texas right now. Well, your accent, Chris, is probably a lot better than my Texas accent. At least I'm gonna count on it. I know some of you are from Texas as well, so maybe you have a good accent. All right, let's head over to the options. If we're looking for a long vertical here, typically traders will look for kind of a sweet spot between 20 and 40 days, sometimes up to 50 days if we need to. We have weeklies here on Texas Instruments. It's a widely traded stock. We're just going to come out here to the July 17s. These are the monthly expiration. They're going to give us a lot of open interest, typically compared to the weeklies. What's nice about that is that the spreads typically are going to be a little bit tighter, which makes it easier on our trading because we don't have as much to make up. We've got two legs there to consider, not as much to make up. All right, stocks trading at 316, 317 almost. And so we've got to choose here between, many times we'll like to start it at the money, or at the money theoretically here today is going to be 320. Let's line up a one here. If it doesn't work, we'll line up a separate one. And actually, I want to start at 310. And we're going to see what 310, 320 looks like. So we're going to say buy vertical. And right now it's at about $5 and a little bit of change. Ooh, I like that, $5. I'm going to put it back at $5. It was a little bit lower than that earlier today, but I think we can work with this one. Risk $5 to make what? Basically $10 minus what's in here, which is 5. So risk $5 to make $5, which would be 100% return, which is kind of a nice juicy return, right? Percentage-wise. What do we need the stock to do? Well, it's already at 317. We need it to go beyond 320. Well, how difficult is it going to be for this stock to do it? Well, I'm going to put my mouse at as close to 320 as I can, which is, that's 321, 320 and change. Not a whole lot. We're not expecting or needing the stock to do a whole lot for us, which is nice. Now, if somebody wanted to be a little bit more aggressive though and say, well, let's go out maybe to the 330, which is the next strike increment. They could come up here. Where's 330? 330 is about right there. So we would have to run up a little bit more significantly, get pretty close to that 52-week high. But if somebody's like, man, I've got 4 weeks to do that, they might be happy to do it, right? So we're going to take the more conservative approach, but if you wanted to be more aggressive, you certainly could, okay? We in this class will allow ourselves to risk $2,000 per trade. That means we can do 4 contracts here. And one thing that we're typically going to do is put in a target profit. We don't typically put in a stop, although somebody could. I'm going to create an opposite order here. And let's figure out what percentage are you guys happy with taking a profit on? I quiz you almost every class on this, right? And I say, what are you happy with percentage-wise? There's going to be a lot of you that say if we get 50%, you are happy campers, right? You're like, take the 50%, jump out of the trade. Some of you might want a little bit more than that. Some of you might like 60, 70, 80%. But generally, we want to settle for something that's not requiring the max amount out of the trade because that's really hard to get to. But if we can get the majority of it, get a big chunk, then typically we can be happy with this. All right, so we've got 70, 50, 50, which is pretty common. Those are some very common ones. Some of you will put in a range too. Bogus is a 50, Will's a 60, Olga's a 70. Okay. The one that maybe strikes the middle there, then we're gonna go with Will's 60%. Ricebird, do you do 60 to 80%? Okay, depends on the market, what's going on. You're gonna be satisfied. Randall, 72.5. Randall is very precise there. Not looking to take everything out of it. So we're gonna, on this first trade, let's use 60%. Okay. 60% of $5 we would be happy with. So 5 times 0.6, it's going to be $3. We're going to add that $3 to our $5 and say if that spread gets up to $8, worth $8, that'll give us our 60%. We'll be happy. We'll move on our way. We're going to make that good till canceled. And we have the 4 contracts there. And then just kind of review it, make sure it's going to do what we think that we set it up to do. Make sure you don't have a typo. Max profit 2,000, max loss 2,000. So we're basically risking $1 to make $1. And could we choose to get out early if we wanted to? Absolutely, we could choose to get out early. You've seen even just a couple of examples that we had yesterday or last week. They got us out pretty quick, and it's not guaranteed to do that. But if we're getting in on what we think is a bullish signal, if we're following the trend and we're not going the opposite of the trends of the market or the stock, makes it a lot easier for the trade to actually do what we want it to do. Oh, let's see. Chris says, yes, Texas Instruments is opening a big campus in Sherman. You know, I live in what's called Lehi, Utah, just a little bit south of Salt Lake City. They have an enormous plant. It used to be a Micron plant. Texas Instruments took it over. It is a big campus. And so, yeah, they've been growing quite a bit lately. Okay, that's our first trade, Texas Instruments. All right, let's do this. I've got another long call vertical that we're going to look at if we have time, but I want to stop here and I want to show you something that we attempted to do a few weeks ago and it just didn't work out for us. So we're going to try it again. What we attempted to do, and this is a request as some of you in our class, and so I think you'll be happy to see this again. We were looking to buy a really long dated option in Walmart and sell calls against it over and over and over again. We went out, we bought a lot of time on this. Now I'm going to show you, oh, it is on the 1 year. Let's just back out here. You know, Walmart had a pretty bullish trend going on. And so if something's got a longer term bullish trend, we can feel a little more confident than maybe something that's very cyclical. You know, maybe it's up and down over 6 months. We're looking for kind of some longevity. And we had some good longevity in Walmart until their most recent earnings. And in their most recent earnings, man, they gapped down. They continued to drop. We decided this was like the biggest drop Walmart had had in like, I think it was like 3 years at the time, and it was really big. And it just wasn't recovering. So we got out. We said, okay, this one is not going to work. We're not going to hold on to this loser for 18 months. We're going to just get out. So we did. So I want to replace that today. Okay, so let's take a look at a stock that also is having a pretty bullish long-term trend here. We've got Cisco. We know semiconductors, things going on in that industry group are just popping, right? They're just doing well. This one's not up a ton today, only like 0.5%. I think it's a little bit different niche than a straight semiconductor. I'm just going to look here real quick. No, we don't. Yeah, here's our Cisco. And I want to just go to the fundamentals here. Helps to power, secure, and draw insights from the internet, blah, 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 blah. They do data center switching, network security. So kind of more of an internet more play versus a semiconductor or an AI play, but they kind of have their foot in there as well. So yeah, it's got a long, you know, that last year's been great for it, especially that most recent earnings report. It had a huge gap up and it's managed to stay above that gap. Many times the bottom of the gap will act as support. And I'm going to move this a little bit. I'm going to move it down because look at that. It's kind of holding fairly nicely as support. Now, when I was looking at this a little bit earlier, it looked like I was trying to bounce here off our 30-day moving average. We had more of a green candle there than a red candle. That some traders might use as an entry if it really were trying to bounce there. And it was trading a little bit higher than what its peak was yesterday. So it's kind of pulled back from that. However, it still has that nice bullish trend. We're going to use that, okay, for our longer dated call option. And then our plan is to sell shorter term, shorter dated calls against it and try to reduce the net debit along the way. So head on out here to the trade tab with me. Now, the request had been to do it on a LEAPS contract. Well, what's a LEAPS contract? It just means it's a longer dated option contract. The definition, it's got to be at least 9 months before the options expire. So let's see what I chose to do here. We're going to do the, in 27, we're going to do the June 17s that expire next June. Okay, so about a year from yesterday. Okay, so we have 364 days for that option to be in place. And you'd think out there a year dated, you're like, well, how much activity is there going to be? Look at this open interest. Yeah, other people are out here doing those contracts as well. Okay, so Mike says he has a friend named Cisco. Cisco must have been good to you, which is happy to see. It's good to see happiness, right? Chris says I installed 4-port Cisco switches in 1996. So that's been what, 20 years ago, Chris? And it cost $4,000 then. I don't know what it costs now, but yeah, it's kind of some expensive equipment, you bet. Okay. Longer dated. There's lots of approaches we could take here. We could say, well, let's do something out of the money, maybe not quite as expensive, right? Because these are expensive contracts. In our case, we're just going to go with the 120 strike. It's not a ton out of the money, but I'm trying to keep us closer to our general risk tolerance. If we were to lose all of it, we try not to lose more than $2,000 a trade. And so we're going to actually hopefully get a net debit here that's going to take that price lower than the $20 contract we're looking at right now. So we're going to go long the 120. And I'm just going to write that strike price out here of the June 17. All right, what are we going to sell? Well, Cisco has some nice weeklies here, meaning lots of opportunities to sell this week, maybe buy it back. Sell this week, maybe buy it back. Sell this week. And every week in our class, we're going to keep doing this as long as that trend hangs in there for us, that longer term trend. And as long as it, kind of stays above that support area we saw, we're going to keep doing it. So we're going to choose, we're not going to go to the ones that expire today. Remember, the market's closed tomorrow. So today, if you have some options that could be expiring, keep that in mind. Market's closed tomorrow. You got to do something with it today. We have here, we could do something. What's nice here is that we do have this single dollar increments that can get us maybe a little bit closer to what we're looking for. I had intended, knowing that we were going to go for that 120 out in a year from now, I was looking to sell maybe something a little more traditional, which would be a strike price a little bit further out of the money and short. So we're going to do this one. We're going to do the 121s. It's not going to take our net debit down tremendously here. We don't necessarily have to sell out of the money. We could sell something in the money and get more premium. I'm trying to do this one a little bit more traditional because we've got a non-traditional one that we're going to look at here next. Okay. Right mouse click, buy. We're going to find our diagonal. It doesn't know what month and strike price we want. Okay. So it sells the one that we just said right now, the 121. We're going to take this out to that June 17 of 27, and we are going to do the 120 contract here. So it does take our net debit down below the $2,000. So right now, everything in the world went wrong on that trade next week, we know essentially kind of the range where our loss would be. Our intent is not to lose the money, though. Our intent is to lower that net debit a little bit every week, kind of pay it down. And then we would like to see is that longer dated, the option that it just kind of keeps going up in value, or at least staying somewhat current. Time decay is not, it's going to have time decay, but it's not nearly as relevant several months and weeks out than it is, say, these June 26s that we buy that definitely do have a higher theta value. Okay, that they'll be the decay rate will be faster on it than it will be in our big dated option. Okay, looks like we've got, not sure if we're doing, there could be some questions here. Let's see here. Sam, you said you're doing a leap trade right now on Cisco. Interesting. I don't know if that's a live trade or a paper trade. It really doesn't matter. Appreciate you sharing that information. If some of you do like that idea of buying that longer dated option and want to experiment with it, do any of these practice trades we're doing, whatever strategy you're working with, whether it's long verticals or diagonals, practice along. You can use these example trades for that purpose. Okay. We are going to send this little guy in. We're going to send him to our dynamic diagonals and long verticals bucket. All right, we're on it. Now we're going to take a look at our non-traditional diagonal. Pan W is a non-traditional diagonal that we did a couple of weeks ago. Let's see, when did we do this? We did it May 28th. So I guess about 3 weeks ago. And generally with a put diagonal, we're bearish on the trade. Well, let's go look at Pan W's chart here. And is Pan W bearish? Not at all, right? It's a strong bullish stock. This is when we got into it initially. And the idea with this trade is that we're more interested in selling puts. We are more interested in bringing in cash into the account. And our long leg, that longer dated put, it's just kind of our hedge leg so that we can continue to try to sell premium against it. Okay, so that's why I say it's non-traditional. It is not the general way that we would do a diagonal. Our Cisco one, that's going to be our traditional one. Okay, in this case, we know that there's going to be time decay here in this August option, the longer dated one, but we're helping to just sell premium. So last week, we sold the 285 put. We brought in 725. Now it's decayed some. It's going to expire today. Some people would say, well, maybe we should just let it expire. Well, where does Pan W sit? 282. Technically, it's in the money right now, isn't it? If we come over here, notice this little logo here. It says ITM. It is in the money. If it closed right now, say the market, we're done with the market day and it closed right now, then we would be assigned. Our design is not to necessarily be assigned here. Okay, our design is to take some money out of the short put. So we're getting what, in the neighborhood of about half of it, right? So fine. Let's sell another one. Let's buy it back, remove our obligation, sell something new. What do we want to sell new here on Pan W? We're going to go out to next Friday's expiration, and our plan there is hopefully to take the money that hopefully is decayed in the short put, take it, buy it back, and sell the ones for July 2nd. Okay, that's our game plan with this. We're going to try to do this over and over and over. Non-traditional, we're more interested in the put premium. Now on here, if you want to be fairly conservative, you could sell something out of the money. Okay, you come out 30, 26, 35, 39 delta. You could do those. If you want to be a little bit more aggressive, you could do just slightly out of the money. I know some people that are more aggressive with this approach, and they will sell in the money and not bat an eye. Okay, so it really depends on your risk tolerance. We're going to go out here. We're just going to do the 280. It's a little bit out of the money, not a ton, but look at the premium on this. Something here in the neighborhood between 665 and 725 if we get filled at the midpoint price. Okay, so 280 is what we're going to roll to. We're going to just line ourselves up here on that 285. We're going to create a rolling order. It's going to say, all right, we're doing a calendar, but then you see over here, it changes it over to diagonal, which is fine. And we said we want to sell the 280 here. So down we go. We're going to buy back our 285. We're going to sell our 280. We're going to bring in a net credit here. All right, that's what we're doing. That's our trade. We're going to send it off, put it in our bucket, and we're going to keep track of it. And ideally, we'll get filled on that and we'll watch it decay now. All right. If we don't get filled on this, I don't know, by the time our class is over, it may have to go in and adjust that. It's saying it only wants to pay us $315 right now. We'll see if it bounces around and if we get filled on that. Okay. Sam says, I've had 3 short put assignments just recently. So you're a little long on the tooth on short puts right now. Yeah, we do have to recognize, I appreciate you saying that, Sam, because we do have to recognize that is a real potential that we could be put the stock. If your intent is not to be put the stock, then we get out of it early, right? We do not necessarily want to be put the stock in this case. This is flitting around here a little bit. It should like our 317 if it's at 336. That should fill for us. We'll see here. Let's see. How do you manage if short call is over long call or expire date on the Cisco trade? So I think your question here is on the short call, when we do it, if it is over the long call, I'm not sure what you mean by over the long call. Do you mean higher than? On this one, on Cisco, let's go to the trade tab here. So we're trying to, or we can, let's use Cisco, sorry. This question's on Cisco SCSO. SCO, there we go. So I think what you're saying is, yeah, we have this longer dated option. It's more kind of an at the money for the strike price that it is. We could have gone in the money. On here, our hope is that this just all decays. Now, is it guaranteed to do that? No. I think what you're saying, what if Cisco just runs and it runs higher than maybe what our premium is? Then we might have to buy it back for a loss. We'd still continue with the strategy. And sometimes if it makes a really big move, then we do end up buying it back at a loss. Could we close it out early? Yeah, we certainly could. And if I take any action like that, I show you. Okay, I show you that that's what we had to do. All right. Let's see if there were any other questions in here that I needed to address. Sam, I think yours is more of a statement than more of a question there. All right. Virgil, what's Virgil saying here? Oh, you're letting us know maybe what some other potential. Oh, you're saying Avgo or Broadcom is a big data center as well because of VMware. Maybe some other stocks that you're interested in, maybe is what you're saying there, Virgil. Cat, Corning, AOI, BE, Dell. Yeah, they're kind of all in the probably the hardware and technology, or what is it called? Hardware and something technologies. All right. You guys, we've done a lot. Let's summarize what we've done here. We've put on 2 new trades. We've done a new long call vertical. Let's see what we got filled on here. We got filled on, that's our diagonal on Cisco. We got filled on that. We got filled on our Texas Instruments long call vertical. If you have time and you may or may not do this. The other one I was going to do here if we had time was Qualcomm, but we're running out of time here. But you can see this nice bullish trend it's had over the last year. Looks like it took a nice support bounce here, maybe, finding some good support, rallied up, pulled back. Today was looking like a close above the high of the low day. If it really closes there, at least it's trading above the high of the low day, right? We can see that pretty easily. So if you did want to do another long vertical, you could try to do that. What I had light up here were the July options as well, and just doing 220, 230 here. Pay $3.98, so about $4 to gain what? $6 and now 5 cents. Okay, so if anybody's interested in doing that, I think I'll go ahead and put on 5 contracts here, and I'll go buy it back I'll go with the very favorite 50%. Okay, there are a bunch of you that like to take profits of 50%. I'll put that in after our class is over because I'm out of time, but we'll put it in to go buy it back at 50%. We get that profit. That would be $3 out of 6 possible. So we'd be looking to close the trade out there maybe at 710 or something in that neighborhood. All right. Excellent. Coming up next, we've got Cameron May, who's back with us. We're happy to see that. Investing in dividend stocks. I didn't see a survey out there today, so you're off the hook for that. But if this was helpful for you, go ahead, hit the like button on your way out. Follow us on or subscribe to our YouTube channel so you can find our content, find those playlists so you can go back. Those of you that are interested in the one I did last week about the scan, all right, to build this liquid options watch list that we're going to use for a few weeks, do that. And Barb and I would love a follow on our X accounts, Barb Armstrong CS, Connie Hill CS. Thank each of you for being here, and thank you, Barb, for helping out in our chat with those questions. Appreciate it. All right, you guys take a nice little break and then come back right at the top of the hour. We'll see you then. Bye-bye.